Can you retire comfortably with $2 million? Well, we'll be delving into that question today. According to a Northwestern Mutual study of over 4,000 Americans, the average estimate for what you're going to need to retire is $1.46 million. So retiring with $2 million should be a drop in the bucket. Well, not so fast. Accumulating $2 million, it's a significant achievement, placing you in a much more comfortable position than the average retiree. However, whether or not this sum is enough for your comfortable retirement depends entirely on your individual circumstances, spending habits, and retirement goals. As a financial advisor, I've worked with several different types of families and individuals, and I have people where $2 million is nowhere close to enough. And I've got people that could easily retire on less than half of that. So let's explore what factors will determine whether or not $2 million is sufficient for a retirement and a comfortable retirement at that. First, you need to determine what your needs are. There are many factors influencing retirement needs. Location is one of the big ones. Cost of living is going to vary substantially depending on your location. Retiring in New York City or San Francisco or Boston will require significantly larger nest egg than retiring at a more affordable location. Healthcare costs is another factor. Healthcare costs are notoriously unpredictable and often represent a significant portion of retirees' expenses. Unexpected illness, long-term care needs can quickly deplete savings. So researching your unique healthcare forecast based on your area, based on inflation, and your unique health conditions, prescriptions, and so on can influence what your retirement savings needs are going to be. Taxes is another big factor. In recent years, there's been a rise of 401k millionaires, but the government is a big stakeholder in these pre-tax funds. They're going to be looking to get 20 to 30% in some cases of these accounts for taxes. Lifestyle is another factor. Your current lifestyle is the biggest indicator of your future spending. Do you live modestly or do you like to travel and spend on luxury goods? Maintaining your current lifestyle in retirement will likely require higher annual income than a more modest lifestyle. So consider creating a detailed budget that outlines your expenses, and this can act as a baseline to determining what your spending needs are going to be every year. Inflation is another big factor. Purchasing power of money is going to change over time. $2 million today is not what it's going to be in 20 years. So accounting for inflation when projecting your retirement needs is important. An inflation calculator can help you estimate the future value of your savings and adjust those spending projections accordingly. Investments determines how successful you stretch your nest egg. And so taking a more conservative approach may yield lower returns, but less risk, while taking a more aggressive approach may help you stretch your investment a lot farther, but does carry other risks. So evaluating your risk tolerance, time horizon, and your return needs in your plan is critical. Unexpected expenses from, life throwing a curveball, home repairs, car maintenance, other emergencies, these all may impact your retirement budget. So building a contingency fund for these expenses dramatically impacts your financial security. Once you have an idea of what your spending needs are going to be on an annual basis, you can multiply that number by 25 and see if that gets you to more or less than $2 million. This is the 4% rule. It widely suggests that withdrawing 4% of your nest egg annually and adjusting for inflation is a safe rate. While it's served many retirees well, it's not guaranteed formula by any means, just a rule of thumb to get a general sense of what the ballpark of your savings may need to be. Doesn't account for tax rates, Social Security, and it may not be appropriate for people planning to be retired for longer than 30 years. And also may not adjust effectively for dramatic market pullbacks. So once you have this, you can start building a more comprehensive plan. When we work with our clients, we use planning strategies to help them identify how much risk they need to be taking for how much they're spending and how they can stretch their nest egg to maybe go a little further. Getting a personalized retirement plan can help diagnose how these may help you. Some of these ideas are dynamic withdrawal strategies. Studies have shown that your retirement spending and adjusting that based on the market environment can have a strong impact on how far you can actually stretch your nest egg in retirement. But it does require thoughtful planning, monitoring, and the ability to stick to a plan in the face of changing and potentially adverse environments year after year. This is where an advisor can potentially shine. Additionally, tax planning can help you stretch your dollars, especially if you have a significant amount of retirement funds. There may be opportunities to realize income at special advantageous tax rates to reduce your lifetime tax burden. For example, you may be able to realize capital gains at zero rates in some years, or may be able to realize Roth conversions at strategically low rates to potentially boost the efficiency of your money. Now, there's going to be a lot of strategies, and at the end of the day, there's probably going to be some that make sense and some that don't. And the combination of strategies is unique to each individual, and that help them get the most out of their spending plans over the course of their life. With a carefully defined strategy, $2 million can certainly be enough for many individuals, but it's definitely not a guarantee, and several factors will influence whether or not this amount is sufficient. Early retirement, for example, may need higher amounts of investments because you're going to be retired for a longer period of time. If you have a luxury lifestyle, maintaining that high spending lifestyle may require higher annual income, potentially making $2 million insufficient. If there's significant healthcare needs, that's also a big factor. It can deplete savings, even with a substantial nest egg, and having a strategy for that is important. Unforeseen circumstances are also going to be a part of the picture. So the best thing that you can do is develop a plan, make the best of your life, and then adjust every year depending on what happens. Even with $2 million, maximizing your savings is crucial for a secure future, and you may even want to consider some of these additional strategies that may help boost your security with your retirement plan. Downsizing is a very common thing for people that own their home. They can potentially free up home equity and reduce their housing costs. Part-time work is a very common thing, supplementing your retirement portfolio with part-time income and providing social interaction or purpose. Budgeting and expense tracking is critical. One of the largest risks for people in retirement is overspending by not paying careful attention to what they are dedicating their money to, and investing wisely, diversifying your investments, and choosing an asset allocation that's appropriate to their plan can help you navigate different market environments. And lastly, planning ahead of time for long-term care can help take a potentially big risk and make it into a known factor. So in conclusion, retiring with $2 million is a significant accomplishment, but whether or not it's enough for a comfortable retirement depends on individual circumstances. Careful planning, a well-defined budget, a sound investment strategy, a realistic assessment of lifestyle and healthcare needs are crucial for ensuring a secure and fulfilling experience with retirement planning. Remember, professional advice can be invaluable in navigating complexities of retirement planning and some of the unique strategies that may be very personalized to your situation help you align best with your goals and circumstances. So don't hesitate to reach out to us. You can click the link below to view our video and potentially book a free strategy call. Hope you enjoyed this video, and until next time.